100% the currencies are going to collapse. Look, in the United States, we've already had 4 or 5 currency collapses. People think the United States never defaulted on their debt, but we have. And the latest being was in 1971 when Nixon took us off the gold standard completely and went fiat. That's a currency collapse. We changed to a new currency, and we're at the end of this one.
Hey friends, thanks so very much for tuning in. I hope you've all had a very Merry Christmas, and I want to wish you a Happy New Year. May you all have a prosperous 2019, and I think we're going to see some rocky rivers ahead. And I wanted to get Bob Kudla, the founder of Trade Genius, back on the line to talk about so many things, not the least of which today as we're having this call, folks, is a record-breaking up day in the Dow, up 1,086 points, at least at one point. Zero Hedge is reporting that that's all due to these pension funds trying to get in with their quarter-end buying, and that's not going to last forever. In fact, I think it's going to end badly for those pension holders. We have Peter Schiff tweeting, "Hope springs eternal in every bear market. What are the odds that the longest bull market in history will be followed by the shortest bear market in history? More likely, it's another sucker's rally." And Bob joins us now to discuss so very much. Bob, thanks for coming on.
Hey, thanks for having me. Merry Christmas to you too.
Yeah, Merry Christmas. Boy, what a crazy day today. And, just back on December 4th, we saw that 795-point plunge in the Dow. We have our president coming out stating explicitly that his biggest threat is the Fed because the Fed is raising rates too fast. He says, yes, the Fed is independent. Friends, that means it's privately owned. So he said he didn't want to speak for Fed Chair Jerome Powell, but he's not happy with what Powell has been doing. And President Trump, as you know, Bob, has been more vocal about his distaste for the privately owned Fed than any president I can remember, and at least going back to JFK. You'll remember that on July 20th, our President Donald J. Trump tweeted this: "The United States should not be penalized because we are doing so well. Tightening," referring to rates, "now hurts all that we have done. The U.S. should be allowed to recapture what was lost due to illegal currency manipulation and bad trade deals. Debt coming due, and we are raising interest rates? Really?" What a profoundly honest tweet. You'll recall, Bob, that the Fed was kind enough to keep rates at or near zero during the Barry Soetoro regime.
Yeah, there was the Hillary coronation move. They wanted everything to be perfectly aligned for her to take power. And then if you noticed, as soon as Trump was inaugurated, they stepped up not only interest rate hikes, unprecedented, 8 hikes in a row without pause. And at the same time, they reduced their balance sheet by 12 to 15%, and the market went down by the same amount. And so that's what Trump is so angry about, is that they did a twofer. It's basically they were doubling the amount of increases by taking away these asset purchases. And what happens to that, Sean, is when they do that is when the banks then have to stop their speculations, what they were doing under the Obama period, and they have to sell stuff. And so you had a twofer. You had interest rates going up. You had the banks selling stocks to now take on these assets they gave to the Fed, and it caused the biggest December market downturn in history. In market history, we had the worst December ever. It wasn't the worst quarter, but it was the worst December. And then I have some subscribers of mine that have connections in the banking world, and they said, hey, the Fed was underwater on some stuff here, so this gave them a perfect opportunity to get out of some of their positions they were losing money on the bond side by making people buy bonds and lower the interest rates. So it's always Fed first, the bankers first, and then the normal people have to pay the tab. But talking about the Trump thing is that his hero is Jackson, President Jackson, who killed, the Second National Bank in the United States for pulling the same kind of stuff. And he also is very aware what they did to Bush 1 when the Federal Reserve raised interest rates into a recession like they're doing now, and it caused Bush 1 to lose the election. So Trump got in front of this thing, and I don't think it's any accident that he got more and more vocal. And on Christmas Eve, he basically told people, hey, buy this dip. I don't care what Peter Schiff says about what's going to happen next week. That might be the case. But I think there's a war now going on between the executive branch and the Federal Reserve. And ultimately, my view is that stock market's going to suffer from this, but at the end of the day, the politicians and the Federal Reserve will blink, and they're going to start throwing a lot of money around at people. And that's why we've been really, really strong on the whole year of, hey, get out of the stock market and start getting into precious metals, and even cryptocurrencies are safe to start playing again. And in the end of August, they stopped going down. And even today, with the market going higher, I expected actually silver and gold and all this stuff to get sold off in cryptocurrencies. Those all stayed either flat or a little bit higher, and same with the miners. And that tells me that they believe the stock market move today is probably short-lived, and going into January, we'll probably see another lower low in the markets, and the safe haven now is in the precious metals, the non-banking assets.
Yeah, I want to ask you about gold and silver and cryptos here in a minute. But first, let's talk about your site, Trade Genius, tradelikeagenius.com, because I'm now getting alerts on my phone. I've signed up for the service, guys. And I have to say, what's really incredible about it is that it takes the emotion out of the trade. So when I used to trade, sort of day trade back in the internet bubble, Bob, I did not do very well because I was so emotionally vested, and that is the absolute worst thing you can do as a trader. So your service takes the emotion out of the trade. You give us the stops, you give us the buy orders, all of that stuff.
Yeah, and actually we did it for the same reason as you did, Sean, is that we were tired of emotionally trading, and we sat down and said, what are the things that really derive profitable trades? And we went ahead and created an indicator, call it an algorithm, call it a signal. We created an indicator that gives us a higher than average profitability and a higher probability of making money on every trade. And then it signals us. And so therefore, the most time people lose money is it's called chasing. They call it FOMO, fear of missing out. And usually when you do that, your emotions get to you, and that's usually the top, because people get excited and they're afraid and they wait. Our indicator looks at it coming off of the bottoms, and it says, hey, money is moving into these trades now. Go ahead and take these trades. And then we just do it on again, on again, on again, on again. So you just take it 2%, 3%, 4% on a trade. Sometimes you get lucky, you get 6 or 8 or 10%. And then a couple of days or a couple of weeks later, you get back in that same trade. But we follow about 40 stocks and ETFs. So literally every day there's a trade that we could be putting on for our subscribers, and it signals out automatically. It doesn't require me being at my desk pressing buttons. The system does it automatically, and it texts out to you or it emails you, and you can just make the trades. And when the trades don't go with you, because they don't always go with you, it'll signal you very quickly that, hey, the trade didn't work, get out.
Yeah, but you include in these alerts the stop limit. So you already set your stop limit, so you don't even have to worry about it. If the stock isn't going your way, your online broker will get you out of it at your stop limit.
Yeah, that's a good point. Every time we put a trade on, I always follow it up and tell people, here's a target, and here's what you should get out if we're wrong. And that's half the game. So, if you want to lose, you want to lose fast. When you want to win, you want to take it as far as you can take it before the sell signal hits.
Well, let me ask you something. I know that I can't divulge anything real specific here, but you guys are, I think, increasingly bullish on Bitcoin, and I want to talk to you about the cryptos. I was watching a YouTube video today. I can recommend this channel to you guys. I really like this guy. It's Crypto on YouTube, and he interviews somebody, a blast from the past, a guy named Da Vinci, who I know from back in the day when Brother John F., Chris Dwayne, and me, and we talked about precious metals and gold and silver in fighting the Fed. You mentioned Andrew Jackson earlier. Often the quote is attributed to Andrew Jackson, where he swore at the bankers and he said, "You are a den of vipers, and by God, I will rout you out." And he did so. And I think that ultimately is what our president is going to have to do to the Fed. But just circling back to precious metals and cryptos, I personally believe that Bitcoin is very, very near its low. It may dip all the way back down to 1,000, but I firmly believe in 2019, Bitcoin will spring, I think, far, far higher, as should precious metals, silver and gold. I'm still stunned that you can buy an ounce of silver at $15 an ounce. Your thoughts right now on the cryptos, Bitcoin specifically, and gold and silver, gold being real money and silver being the people's money, in an atmosphere where we see currency crisis across the planet. I'm going to read some of these currencies for you guys here in a second. You'll be stunned at the currency crisis that is actually happening right now all over the globe. But your thoughts on precious metals as a way to hedge our bets here, Bob?
Yes. First of all, gold and silver, the lows are in for sure. I mean, silver, we've been trading that range from $13 to $15 now for the whole year, and today pushed up to the top of the channel. One of these next moves is going to break out. My personal view from Trade Genius, looking at the currencies like you were looking at, is within 2 years, you're looking at $60, $70 for silver. You're looking for a double in gold because the politicians are going to have to really start putting what they call hot money into the economy. Now, Bitcoin, I'm a little bit more optimistic than you are on that. I think it's going to hold above 3,000. And a lot of it will depend on what happens with the next Fed meeting. If he follows through with any more increases, or if they start to blink, then I think cryptos will take off. And so right now we're just trading the range. I can send you some charts that just what we did with Ripple. Even the centralized coins are doing well.
Can I interject just on Bitcoin?
Yeah.
The reason I brought Bitcoin up, and the reason I'm bringing it up on this interview at this time specifically, guys, is very purposeful. The last time Bitcoin hit an all-time high, if you look at its chart, it had hit an all-time high. I don't have that number in front of me. Let's say it was 1,000 or 1,100. But the first time it hit that all-time high, it retraced, I think, somewhere in the neighborhood of 86 or 87%. Now, during this last peak, it hit somewhere, I think, an intraday high of near 20,000. And it has retraced somewhere around 85 or 86%. I think we're getting very low. This is exactly what the bankers like to do, Bob, because they're all getting in while the common man is getting out. When there's fear and panic, the common guy, the little guy gets out, and the bankers get in, the Wall Street bankers. It's their age-old plan. That's why they're so damn wealthy.
Well, they did it with oil too. Well, absolutely. They used the futures markets to steal from people who can't hang with them. And that's why they set the Bitcoin futures market up in the first place, so they can take all the scared money, what we call the dumb money, the people dumb by meaning unaware money, and just scaring people out. And now they've gotten Bitcoin dirt cheap. And you're right, these 80% moves are actually what's called parabolic move retraces, and it keeps doing it from a higher base, Sean. So yeah, we're convinced Bitcoin's going to move. And look, the dollar's been suppressing all this stuff, and there's no way they're going to be able to keep the dollar where it is. I don't think Trump likes this dollar being this strong, and I think he's going to force action on all of it.
Now, I want to circle back here. The reason I brought up that YouTube channel, Crypto, shout out to them, is because that guy's been having on Da Vinci, who is a great guy. And Da Vinci, back in the day, in like 2011, was on YouTube, and he was a very big precious metals guy, and probably still is. But he was one of the first people talking about Bitcoin. And back in the day, I think in 2010, 11, when he started talking about it, you could probably get into Bitcoin certainly under $10, maybe under $1. Here's the point. Da Vinci is still bullish on Bitcoin. Ultimately, he says it will go above its all-time high and probably past $100,000 of Bitcoin. But the reason I wanted to shout out that channel, Bob, is that it brought to my attention this currency crisis, this international currency crisis. And so far, it hasn't affected necessarily the yuan or the euro or the pound, yen, or dollar. But as I read these numbers for you folks, think about if you lived in these countries, and think about what will happen to you and your wealth if those currency crises hit the dollar, the euro, the pound, or the yen. Okay, listen to this. The Venezuelan bolivar, which of course is the one I always cite, down 99.99% as of September 2018. So that's the one I always cite. But listen to these others. The Sudanese pound, down 61%. The Argentine peso, down 50.5%. The Turkish lira, down 44%. The Angolan kwanza, down 38.9%. And the Brazilian real, down 20.7%, while the Liberian dollar is down 18.5%, and the South African rand is down 16% as of September 2018. Bob, how'd you like to live in those nations and watch your purchasing power dissipate at that rate?
Oh no, you wouldn't. And every time one of those countries would go into crisis mode, you actually even see Bitcoin to the dollar move higher. And look, Europe and Europe and China are in big trouble. The word on the street is the yuan will devalue by half. And Europe, I just don't see how the European Union stays together in the next 2 to 3 years. So there's absolutely going to be a panic out of banking assets, and crypto is the quickest and fastest way to get your money out of a country. It's even better than gold and silver in that regard, and because you're out of the country immediately. And so that's why we're big fans of non-banking assets. Metals, miners, cryptos is where it's going to be, as we go deeper into this recession that we're going to get over the next 2 years.
Well, let's get back to the U.S. economy, and we can stay on silver and gold because I still firmly believe that's where people need to be. Guys, remember, the bankers have manipulated the prices of silver specifically so low that it defies belief, and they've done it on purpose. But the thumbs up is the fact that you can get in on silver and gold at these low, low prices, these manipulatedly low prices, just like the smart money probably is. And what we're seeing in the markets is cause for concern, Bob, because we're seeing this inverted yield curve, which of course means a recession is on the horizon. But it wasn't very long ago that everything was looking great because President Trump was implementing sound policies for our economy and bringing manufacturing back, bringing jobs back. How is it that suddenly we're looking at a recession?
Well, the Fed induces these recessions. They make it nearly impossible for you to borrow money, where you have to borrow it at higher cost than you probably should. And then people get afraid, and then they see things like inverted yield curve, and they're saying, well, instead of me investing now, I better maybe pull in my horns, and then it becomes a self-fulfilling prophecy. And so there's no need for this. We're the only nation in the world that have purposely inverted our yield curves to ends of which we're not privy to. The Federal Reserve has no obligation to share what their strategy is, but if their strategy is a robust U.S. economy, that's a failure. And we know they're not idiots, so they have to be notorious. So we think they're engineering this economic recession for political purposes. I can see no other way around it. But knowing that, I can't go in there and stop the Fed. So you have to do the next best thing is how do you profit knowing what they're trying to accomplish. And we think they already went too far. And that's what brings gold and silver and the miners. And, we talk gold and silver, they may double, but the silver miners and the gold miners are going to go up 400 to 800%, Sean. We have data that shows it. And I traded that in 2011. And, we lifted our accounts by 6 times during that period before they broke that bubble. And we're going to see that again. Stocks like, ABX, which is going to be called Gold, GOLD, because they merged with Barrick Gold and merged with the African gold miner. It's going to be the largest gold miner in the world. It's going to go from $13 to $50. Look at Goro's going to double. First Majestic's going to probably go from where it is now in the mid fives to probably 10 or 15, maybe $20, and on it goes. And that's where the big money is going to be made. And when we go into an economic recession, we get an inverted yield curve, and then they panic out of it. That's when the dollar rolls over, and these types of assets explode. But the stock market itself doesn't go up. So you have to be in the things that are going to move, and those are the things that are going to move. Metals and miners are going to move over the next 24 months. And it's already started, so it's not an on-the-come thing. This process, this train has already left the station.
I just find it ironic that on December 3rd, this appeared on Zero Hedge, bad omen worsens, yield curve inverts for first time since 2007. You'll all remember what happened in 2008, guys, a banking crisis. Well, on December 3rd, Zero Hedge reported that the bad omen worsens. And what happened on December 4th? A 795-point plunge in the Dow. Now, Bob, you and I both know that the bankers can manipulate the Dow just like they manipulate gold and silver. But I don't think it's a coincidence that the yield curve inverted on the 3rd, and on the 4th, the Dow plunged. Oh,
no, for sure. And you can see it coming. And as soon as they started raising interest rates and started pulling back on their asset purchases, we told people, you got to get the cash because you just don't know when it's going to drop. The only thing that surprised me is it didn't fall earlier, but they sure as heck made up for lost time in December. And we're not done yet. We're going to probably get these bounces. I think what Peter Schiff was saying is correct, and they're going to resume their selling of assets, and we'll probably make a lower low between January and March of this year. They're unwinding the whole trade that they did to get Hillary elected. So we're probably going to go back to the prices we were at 2016, which is going to be around 1,800 on the S&P, and which is another 20 to 25% down. I think it's really going to scare people. We're getting these bounces now. People are going to get back in. We may go a couple days, and next week might be good to start the year, and then they're just going to pull the rug again on people. So, the good thing for us is that our signal will tell us whether if we're in it to get out or to go short the market. And so I don't really rely on the news or the bankers. Our signal is tells us when money's leaving, and we'll get out, and it tells us when money's coming back in, and we'll take a trade that way too.
Let's return to gold for just 1 second. I don't want to beat this thing to death. Everybody knows that I'm a big precious metals guy. And yes, we've been given our lumps over the past 6, 7, 8 years because of the manipulation by the banksters. But those of us who are right thinking about it know that those banksters have just given us the opportunity to dollar cost average in lower and lower and lower. Ultimately, it's not what you paid, it's how many ounces you have that will make the difference when the system collapses. Bob, do you think it's baked in the cake that the system will collapse at some point, meaning the dollar, the yen, the euro? And the reason I ask is because if you look at what Russia is doing, they are buying gold as fast as they can. Just look at the rise in Russian central bank gold reserves, folks. And just so you guys know, Russia added another 37.3 tons of gold during November alone. 1.2 million ounces of physical gold just in November, Bob.
Yeah, and to give you some perspective, the debt is rising around the world at 9 to 10%, but only supply is coming up 2 to 3% in gold, and that makes it more valuable over time. And India is now releasing this new service for their people, is that they're able to do, like layaway when you were a kid, they had the layaway specials where you could go pick up your gift after you pay for it. Well, they're doing layaway for what's called buying grams of gold in India. And so that the common person can, over time, put enough rupees together to buy gold to protect their family. Even the Indian government knows what's coming. And, and to answer your question that you put out, 100% the currencies are going to collapse. Look, in the United States, we've already had 4 or 5 currency collapses. People think the United States never defaulted on their debt, but we have. And the latest being was in 1971 when Nixon took us off the gold standard completely and went fiat. That's a currency collapse. We changed to a new currency, and we're at the end of this one. So I don't know how it's going to affect itself or what's going to replace it. But whenever they replace it, the common person gets poorer unless they own gold. And there's also no accident when we went up the gold standard. You went from a one family earning household that could take care of their family to now 2 earners that cannot anymore. So, and it's just going to get worse again because the politicians are unable to contain their ability to spend. And until we get back on some sort of a commodity or a gold standard, is that the pain will continue. But no doubt, around the world, every currency you see today is going to fail, 100% guarantee, because that's how it's been all throughout history, Sean.
Well, I just hope people, and I know my audience is very, very smart, but I hope others that hear this message for the first time will heed the warning. I know that if you're not familiar with the precious metals market, you probably don't even know how to buy silver or gold, and you probably had no idea silver was only 14 or 15 bucks an ounce. But I'm telling you, folks, get your hands on some physical precious metals while you still can. I think we're coming into a time where we're going to see more volatility, tremendous volatility in all of these assets, in all of these sectors. And you have to remember that gold and silver in physical form are debt-free assets. If you hold it, you own it. You own one of the few debt-free assets on planet Earth. So let's round out this conversation, Bob, with talk about the Fed. I was listening to an interview with our friend Lynette Zhang over on X22 Report, and I think she basically predicted that when this next crisis really hits in earnest, President Trump will take the power away from the Fed. Do you agree with that? I think that's what he needs to do. But boy, he's playing with fire there because these bankers, these Rothschild bankers, have a long history of whacking people that get in their way. Do you think Trump will be able to take the power away from the Fed?
If they continue down this path, I think he's setting the Fed up, for an adjustment or more oversight or more transparency, or taking their power away from them in some way, shape, or form. I don't know if they can just turn it on or off. But look, nothing surprised me with President Trump anymore because he doesn't do half measures. He may just go right in and say, "Hey, Federal Reserve, is unconstitutional, and that Congress and the presidency has the right to print our currency, and this is just some enterprise that should have never been in existence."
Yeah, that's 100% right. It should have never been put back into existence in 1913 under the watch of Woodrow Wilson, who, of course, played ball with the criminal international bankers. And our friend G. Edward Griffin wrote his book about it, The Creature from Jekyll Island. They met in secret. They usurped our constitutional form of money with their funny money printing press controlled by international private bankers, and they have manipulated our currency and our politics and our government ever since. Guys, pray that President Trump can and will take the power away from the Fed and return it to the people to whom it rightly belongs. Bob, before we let you go, tell people how they can try out tradelikeagenius.com, because again, when the markets get this volatile, you have to take the emotion out of it if you want to make any money.
Yeah. Thanks, Sean. So what we do is we have a number of services. We trade the cryptocurrencies and we trade the stock market, and we have the trade signals that Sean was referring to. In addition to that, we have chat rooms or trading rooms where you can come and ask any question you want, or trade alongside some other traders who do very well for themselves. And then we also have training classes and personal coaching. But what we did for you, Sean, for New Year's is that we put together a number of bundles that are discounted very significantly, and bundles 1 through 6, depending on how advanced people are and what they want to get out of a service such as ours. And they can take advantage of those special prices until midnight of New Year's Eve. So just go to tradelikeagenius.com, select any of the bundles that you see that are valuable to you, and come join us. And we've been doing very well. Like I said, our algorithm is time tested, and it puts you in the best possible position to profit from any given trade signal that we put out. So no emotion, just the math, and we're happy to share it with you guys.
All right, outstanding. Well, Bob, I'll put that link below for folks, and I really appreciate your time. We've got to really keep our eye on the ball here moving into 2019, and I will return to talking about cryptos a little bit as these currency crises spread around the globe. Our guest has been Bob Kudla from Trade Genius. Thanks a lot, Bob.
Thanks, Sean. Thanks for having me. Happy New Year.
Happy New Year to you. And guys, Happy New Year in advance to all of you. I pray that 2019 is filled with mass arrests of traders and prosperity for you and your family. It is possible to survive what's coming if you are informed and well positioned before the tsunami hits. So thank you so much for tuning in. And for real news 24/7, visit us at sgtreport.com. God bless, guys. Bye-bye.
They spelled out in detail how they were going to do it. The shadow government, a network of central banks, a graduated income tax, tax-exempt foundations to be able to shelter their own wealth from taxation. The taxation they were going to put against earnings, earned income, the mark of the middle class. They spelled all of these things out. They spelled out how they would need to poison the people they didn't want.